So that was not a particularly good budget for the property investment community. And in this video, I want to go over some of the highlights of the budget that was announced today. Focus on really the property side of it, which was not an awful lot. I will give the sort of overview of the tone and the vibe that Hunt was talking about and projecting within the budget and what we can do if we read between those lines. But I do want to focus in on the subtext, if you like, of what was talked about with the property world. Actually, bizarrely, even though it might not be construed as a good budget for property investment, it might be construed as a better budget for residential property, so people who are looking to buy houses to live in. And I've already got Tourism Golf there saying, well, bringing out one of the bits of, well, it wasn't even small print, was it? Small print was another one, talking about furnished holiday let relief. Anyway, before we go on to that, I am live, so if you can hear me and see me, give me a thumbs up, give me a like, put something in the comments to make sure that you can hear me and see me. And if you're new to the channel, welcome. On these live streams, what I tend to do is go through the data and what's actually being talked about under all the hyperbole and headlines, so we really understand what's going on to allow us to make better decisions. And we're going to see if we can make any better decisions, understand what's going on after that budget announcement. So let's just start off with the headlines. And I think the two headline grabbing policies, not that there was really any headline grabbing policies, because I think everything had been leaked out before and everything had been covered in the media before, was very much the cut in national insurance, another 2p, which we're expecting, and the abolishment of the non-dom status, which is interesting. I actually think I agree with it in terms of something we should be doing to make tax fairer. Of course, when you look into the detail, people can still come and benefit from the non-dom status for 4 years before they start paying the same tax. And I'm sure there'll be loads of loopholes that people can get round. But anyway, that is very much a headline grabber, and I believe it's there to take the wind out of Labour's sails. That's clearly one of the sort of policies they're going to be going after, the Tories, when they go into election run-up. Before I dive into housing, and by the way, I can see some, we've got a couple of comments coming in. Put them in as we go along, team. Let me know what your thoughts were, by the way, as before we start talking about the individual things. Let me know what your thoughts were. Good budget, bad budget, indifferent budget, kind of a bit of a vacant budget, and how is it affecting you, or how do you believe it's going to affect you? Look, I watched the thing. It's an hour of my life that I'll never get back. And it's amazing, isn't it, how they just seem to like it's like children shouting across the playground, laughing at their own jokes, thinking they're very funny, where they're probably not really very funny and just ripping shreds off each other rather than actually getting on and doing something. Anyway, let's not get political about this. The vibe and the tone that Hunt was going for was very much a long-term plan for growth. Okay, I've spoken about it a few times now that clearly the UK is super unproductive. And when we go into, when we looked at GDP, I don't really care about overall GDP. The one thing that I think is the most relevant metric is GDP per capita. And that was talked about, actually. Hunt did bring that up and say, when you look at GDP per capita, it is reducing, which is not a good thing. It shows that we're not very productive. So a lot of the budget was obviously built around this longer term plan to get us as a country more productive. To be more productive, we have to have more investment. So again, the sort of headline theme is getting more investment into the UK. And at the same time, contrasting that, say we get investment into the UK, we become more productive whilst lowering taxes. And I have no idea how we managed to say that several times without breaking up laughing or cracking up laughing. When you actually look at the tax burden, which is, I think, acknowledged to be rising all the time with the tax freezes we've got and the nominal wage increases we have, and over the next term between now and 28-29, it's forecast that we'll have the highest tax burden since the Second World War. So I'm not quite sure how we can do that without with laughing. But he made a real point on a regular basis of pointing fingers at Labour and saying that they will be raising taxes, whereas the Tories are not raising taxes. And I suppose objectively he is correct. They're not raising it, but they've frozen it, and everybody's wages are going up, so it's pushing more people into higher tax brackets with the stealth tax. Cool. So that was very much his theme. Actually, there were some figures. I've got my notes here, and I've got my glasses on to look intellectual and look at like I know what I'm talking about. He talked about the amount of additional money that has gone into to the economy as an investment, contrasted to the amount of, so the drop of GDP. And when you see that, when you see the investment that has gone in, and he talked about that business investment under Labour, 9.3% when they finished their last term. The Tories have got it up to 9.6%, and this year it's going to be 10.6% of GDP investing into business. But he did then say that that's not translating into productivity. So with extra money going in, that should really translate to more GDP, more growth, more productivity, but it's not. So they need to fix that. The only thing that I took out of that from a business point of view was the introduction of being able to fully expense leased assets. I think that's actually a good thing as a business owner. I actually lease in my scaffold company quite a lot of stuff. We have lease products that we buy equipment on in other businesses. And we'll talk about furnished holiday lets in a bit. I lease various things. So being able to fully expense leased assets, I think, is a good thing. And that goes hand in hand with the capital allowances of being able to fully expense those capital allowances. So that's good for business. But let's forget all of that, because all I want to talk about right now is property. Okay, let's talk about what was in the budget for the property. Before we do that, I would like to just ask for 30 seconds of your time to explain how you can help me grow the channel. I know I've not been that active recently because I've been very busy in my own property business, but look, we're trying to grow the channel to 5,000 people. There's a reason for doing it. The more people that can get better investment advice, direction, understand what's going on, can make better decisions, and that's better for everybody, right? So I don't particularly care about shaving little bits here off, bits of tax here and there in terms of budgets. Being able to actually go out and multiply money, for me, offense is way better than defense in terms of changing your financial future and grabbing, your future and legacy by the proverbials, right? So if I can have 30 seconds to explain how you can help me get that message to more people, here we go. Those of you who are regulars, you'll know that I'm fascinated by data. And when I look at the channel stats, I can see that just under 65% of people who watch my videos aren't actually subscribed to the channel. Now, I do know this stat is actually way above the average for YouTube and shows the power of the community that we're building here. But I want to do better, and I'd like to make a deal with you. I've got a vision to empower as many people as possible on this planet to take ownership of their futures using income-producing assets to reclaim your time, freedom, and choice. And if you can just hit that subscribe button, I'll work tirelessly to grow this channel, make it better and better for you so we can fulfill that vision together. I cannot tell you how much it helps. As the channel gets bigger, I can put more resources behind it, improve the production, the content, and ultimately the value that I give to you. So if you could do me that small favor and hit that subscribe button now, as well as the like button on this video, it would mean so much to me as we continue to grow this community together. It's the only favor I'll ever ask you. Thank you, and let's get back to the episode. Okay, please do hit subscribe now so we can get to 5,000 people in the next few months. That'd be amazing. Right, let's talk about property in the budget. What was talked about? So beforehand, we were talking about, will there be something in there for first-time buyers? Will there be something in there for mortgages? We talked about 99% mortgages. Will there be something for stamp duty and stamp duty breaks? And none of it was there, okay? Nothing, nada. Which I actually don't think is a bad thing, because quite honestly, all of that tinkering and artificial propping up we talked about is a bad thing. I've talked about it for 6 to 9 months now, that in the election run-up, if the Tories start giving these big giveaways and then artificially cushion or reverse the property market, that is not a good thing. So it'll end up going harder further down the line, or crashing harder further down the line. So removing that artificial stimulus will allow it to settle where it should settle, and get back to where we need to be in affordability. And when we looked at the nationwide HPI last week, we saw that affordability graph coming down. This is good for people, right? I have no issue with this in the slightest. And I say that as an investor and a property entrepreneur. So I'm quite surprised, actually. I am quite surprised. I do believe when you look at the budget and you look at everything he's talked about, and when we read between the lines, and he's talked a lot about long-term growth, or he talks a lot about long-term investment, all that sort of stuff. The reason he's talking long-term is there's nothing. They've got nothing to give short-term. I literally think, that he's got no headroom. The headroom that he thought he was going to have when the swap rate started coming down has reversed. So I feel he's got no headroom to really give anything away. They're probably, feeling that just doing that standard giveaway is not going to win them the next election. And they have to maybe, part of me thinks they've got to come out with something sensible, which is maybe what they've been talking about, longer term, and getting back to growth and investing in the UK with lowering taxes, which sounds great. Maybe they think, look, let's just be sensible and have some sort of sensible long-term plan, and that might get us some more votes. But the giveaways is not there. But let's talk about what they have taken away. Before we talk about taken away, right? we can have a look at the actual budget itself. So if anybody's interested, this is the actual budget report from the HMRC websites. Housing is 3.22 onwards. They've got some clauses where they're talking about small amounts of homes, right? Small little developments, 7,000. They talk about making progress for the long-term plan of housing, proposing long-term changes to help the market bring forward new houses, blah, 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 blah. Everybody talks about getting up to build 300,000 houses a year, which is what we need. This is small fry as far as I'm concerned when we look at these, these little clauses here. Unlock 20,000 homes, great. The small fry, all right? The ones that we care about, capital gains tax. Okay, they're actually reducing capital gains tax. So this is a giveaway to people with second homes or investment properties owned in their own name. So reducing it from 28% to 24%. And they've obviously done some modeling and they're trying to stimulate more supply. They're trying to stimulate people sell rental properties, private rental sector, sell more second homes, sell more, stimulate people to do that, and they believe they'll actually increase their actual nominal capital gains income by getting more liquidity. So they're clearly seeing a liquidity dry up in terms of that as a tax, right? Would that particularly change many people? A difference in 4%, is that going to swing many people either way? I'm not convinced, but it's a giveaway. Here's the next two, right? Big one here. Short-term holiday lets or furnished holiday lets tax regime. Now, I don't know if this was talked about beforehand. I certainly hadn't seen it anywhere. It wasn't on my radar. So when he said it, I actually almost spat out my coffee. So this is a massive one, and I say massive. It's massive for a very small subsection of investors. Okay, so if anybody here is watching and they're homeowners looking to buy, sell homes, it's not going to do anything other than maybe put more homes, residential homes back onto the market. This will significantly affect the investment community, because I know, because I'm part of the investment community, that a lot of people have been switching their normal rental properties to furnished holiday lets, short-term accommodations. There's a much more favourable tax regime, and as a furnished holiday let, you don't come under what's called Section 24. So there's various aspects of this actually. You don't come under something called Section 24, which is the inability to offset interest against profits as a private landlord. There is basic rate relief on it, so I don't want to get too much into Section 24. But furnished holiday lets get around that no longer, it looks like. And then there's some various other things as well. There's capital allowances. Difference in capital allowances structure or claims that you can do for a furnished holiday let, and also furnished holiday lets you can actually sell your business and attract BADR, business asset disposal relief, which is what entrepreneurs relief is, which effectively means you can sell it as it's effectively like a trading business, and your gain on selling that business would be taxed at 10% rather than normal capital gains tax. So there's actually no detail in this of exactly what they mean about the tax regime. Do they mean you can't do capital allowances anymore? Do they mean BADR is no longer applicable? Or is it just the rental income or your interest on any finance product not being able to be offset against your profits, i.e. Section 24? So we need to see a bit more detail about this. It does say from April 25, so we've got a year to work this out. The place that my mind immediately went to is actually, if you're holding furnished holiday lets or short-term accommodation in limited companies, that is actually not really relevant in the slightest. And when I say relevant, I mean the interest rate relief on your income, on your profits, because Section 24 is on personal name only. Any income through a limited company is not subject to Section 24. So therefore, if you're in a limited company, is it going to make a big difference? I don't know. But then the capital allowances and the BADR need to be clarified. So I think that's a really big one for the investment community. So I think that's going to now force probably a lot of people who have run into short-term accommodation since COVID, since unlocking. A lot of people have flooded into it. A lot of people have been transitioning from long-term rentals into short-term rentals. Probably a lot of people are holding those in their own names, and this is now going to affect their net profit or their post-tax income significantly. I also know that in the short-term market at the moment, because there's been such an inject of supply, I would say up to about 6 months ago, probably mid last year, demand has been matching it, but we're now seeing that inflection point where I would say supply is now definitely starting to overtake demand, and therefore a lot of units are getting more difficult to actually rent out. So I think it's maybe a little bit of a perfect storm coming for people in the short-term accommodation, furnished holiday let space. So we'll have to keep an eye on that and see how that manifests. So that's the first thing to mention. The second one, this for me is a massive one, okay? This for me is a massive one, and this is MDR. Now, this is a super niche part of, I would say, what I do, how I invest, and it was definitely a little subhead or a little bit of small print in the budget, because I think a lot of people probably do not understand or know of MDR or what multiple dwellings relief is. So effectively, and by the way, just in case you didn't hear, MDR is being abolished, and it's actually being abolished by 1st of June 2024. So it's 4 months away, 3 months away. Not very. This is quite a quick thing being abolished. Now, I'm really very interested in this because I'm currently buying a block of 7 flats where we save about £40,000 to £50,000 worth of stamp duty using MDR. And effectively, what MDR means is if you buy multiple dwellings, which could be blocks of flats, could be mixed use, so if you've got residential units and retail or commercial units, rather than assessing the stamp duty liability based on the full amount or the full purchase price, you take the purchase price and you divide it by the amount of dwellings. By the way, it's not tax advice or anything like that. It's just a very quick overview of MDR. You take the purchase price, divide it by the amount of dwellings, and then you're going to be taxed on the value of each of those individual dwellings. So let's just go super simple, right? Let's say you're buying a block of 10 flats for £1 million. If you were to have stamp duty applied at £1 million purchase price with your 3% surcharge, because as your investor, you're going to be having that 3% surcharge, it's going to be a massive stamp duty tax, because obviously the bands ratchet up. £1 million, I don't know off the top of my head what it is. It's certainly going to be over 5% for a big proportion of that, probably way over 5% actually. With MDR, if you had 10 units and you buy for £1 million, effectively you can have stamp duty applied as if you're buying 10 flats for £100,000. So you're going to be in the lower stamp duty bracket. You're still going to have the surcharge on, unless there's a commercial element. And if you've got a commercial element, so if it's a mixed use building, and this is where it's a really very generous tax incentive for people in the property investment, property development space, having that mixed use development, you could have one retail and 5 flats above, and because you've got that commercial element, it all goes under commercial stamp duty rates, which doesn't attract the 3% surcharge. So that's a massive change to people who are in the sort of models that I help people with and I invest myself, which are very mixed use or higher density blocks of units. So interesting that feels like it came from nowhere. So I've got to get the current purchase through before 1st of June, because otherwise I'll add about 40 grand's worth of tax to it. And that's it, team. That's what they've got in property. So a little capital gains tax giveaway, the abolishment of furnished holiday let tax relief, and the abolishment of MDR. These are not good things for investors, for property entrepreneurs. And for me, it definitely shows the continued war against, landlords, continued war against not even landlords, right? I think the war from landlords has been won, right? The government have beaten landlords into submission. This is now the war against property entrepreneurs who are, looking at other models, and one by one, these, the incentives for doing different models are being shut down. Don't forget, with furnished holiday lets, there's also a consultation going on at the moment about the planning system, and I would say 99.999% sure that will result in a new planning class for short-term accommodation. It'll probably be C5. So if anybody is, I know I'm talking very much to the investor community right now. Normal residential property is C3. HMOs, houses of multiple occupation, are C4, and that came, that basically went through a consultation, and a new planning class C4 was created. They're talking about creating, in England, it already is in Wales, a planning class called C5, which effectively would be for short-term let accommodation, furnished holiday lets, and it would come under permitted development, so you could take a house and operate it. But that, of course, if there's an actual planning class, it gives councils the ability to use something called an Article 4 mechanism to basically say, no, you can't do it without applying for planning. And obviously they're going to do that if they want people to apply for planning. Like if you're in Cornwall or the Lake District and there's a massive flood of properties, they want to be able to control it. So again, the little bonanza that's been happening for the last 2, 3, 4, 5 years for service accommodation, there's another blow to it, I'm afraid, going forward. There we go. That's what we have from the budget today that I want to talk about. All the rest of it, for me, vaguely superfluous. If I look at my notes, nothing really interesting that I want to talk about. Yes, I again almost choked on my coffee when he said changing the IT system in the NHS was going to cost 3.4 billion. I wonder how much they're going to be paying IT people per hour to implement that. I mean, really, 3.4 billion for an IT system. I mean, maybe it's just way more complex than my very basic business mind has. What I did think was interesting is he did say, right, at the moment the NHS loses 30 million hours a year due to IT inefficiencies. And it obviously sounds like there's no sort of, which I find amazing in the modern era we live in of IT systems, SaaS systems, cloud-based AI-driven systems. How we can have this archaic system which loses 30 million hours a year. Incredible. There we go. Let's see what we've got in terms of comments. What's your thoughts, team? Let me know. So let's see what we got. So let's just start at the top with Tor. How are you doing, Tor? FHL relief being abolished is going to kill holiday rental and Airbnb landlords who have mortgages. Yes, it is. And actually something that I haven't even mentioned when you start looking at this is don't forget anybody with any size. And again, we're talking about, and I'm presuming this isn't going to go into limited companies, but it's just going to be people with personal names. Because of the turnover, and I mean financial turnover, that short-term accommodation units create, because it's high turnover and then you've got lots of costs that come out. It only takes 2 or 3 properties until you're VAT registered as well. So a lot of short-term landlords, Airbnb landlords, very quickly get to VAT registration threshold, and that compresses their margins more. And this is going to compress the margins more. So I agree. I think this is going to be tricky for people. It's going to be interesting to see how it plays out. Again, I think it's going to drive a lot of rogues is not the right word, but people who have not got the financial model right. It's going to drive a lot of those people out of the market. So as with anything, I think there is always a silver lining. And the silver lining is if you're buying property at the right price and the margins are actually there and you're being forced to buy at the right price, those people will thrive. So, a lot of people will be flushed out and maybe it might readdress some of the supply demand imbalance that we're seeing right now. It's not going to happen overnight. Let's see what we got. Nothing burger budget from Darren. Here we go. Matt says on FHL, main benefit was 10% capital gains tax under BADR. Is this gone as well as mortgage interest relief? Yeah, so I think that's when I went through it, it doesn't actually mention what the tax... I love it when they put throwaway comments like, let's get rid of FHL tax regime, right? So let's quantify that, shall we? What does that mean? Is that everything? Can we suddenly not have any capital allowances? If you've got it in a limited company and you're operating as a professional business, can we still sell the limited company and benefit from BADR? We'll find out, Matt. As ever, there's actually no meat on the bones. It's just a broad tax regime. I have a feeling this is going to be offsetting finance costs against income. I've got a feeling that's what it's going to be. I would be surprised if they started tinkering with capital allowances and all of that sort of stuff and BADR, but you never know. Don't commit to me on that. Stafford says the government's committed to building new homes. They don't build homes. Yeah, look, it's all noise, that, isn't it? At the end of the day, Darren, if a policy isn't scheduled until April, sorry, let me put that on. If a policy isn't scheduled until April 25, the odds are they won't even be in power, and it could never come to fruition. Yes, this is correct. Would we see Labour reverse that? I would probably suggest not. It's become quite a hot potato, actually, this furnished holiday let in certain areas, and very much from a levelling up point of view. I know Gove has been talking about it quite a lot. From a levelling up point of view, they want areas and regions to have the best chances they can. And I think if you've got lots of second homes, lots of Airbnb homes and no actual community, no actual workforce there, then that's going to be taking away from the local community and not going down the levelling up route. But I think they're missing a little bit of a trick there, actually, that not all FHLs furnish holiday lets. And this is one of my clients asked today. is this also, just all short-term accommodation, or is it purely a furnished holiday let? Because there is a difference between furnished holiday let and short-term accommodation in terms of how you look at it. So there are different. I'll do another video on this. There's different classifications of what counts as a furnished holiday let. One of it is about the length of time people stay at it. So we've also got short-term accommodation, which could be anything up to 6 months, right? So you could put a contractor in who's, or a group of contractors in a house who's working at a site, and go and book it out for 5 months, 5.5 months, even a year, right? It doesn't have to be under AST, just for however long they're going to be there. Now that won't actually fall under the definition of furnished holiday let, but it's still short-term accommodation. So there's lots of grey areas or lots of things that we need to clarify with what they're actually talking about here. There's just not enough meat on the bones to understand. Kel Surprise. Stafford, why do they seem to hate landlords and holiday letters? Yeah, look, it's got to be careful what I say on YouTube in public sphere. There has been for a long time an anti-landlord movement, hasn't there? That's no surprise. And I'm a landlord. I'm a property investor, so I lease out commercial units. I lease out blocks of flats to supported living companies, assisted living companies, council contracts, normal private tenants, and I also have short-term accommodation, furnished holiday lets. I've got all of it in my portfolio. I sit here and I go genuinely look at it and go, look, I'm providing a service that's needed, a service that I like to think is a high quality service than a lot of other people do. I do totally understand the concept of people getting angry with slum landlords, right, who charge people ridiculously through the nose for substandard accommodation and are purely profiteering. But we've got to look at both sides of the equation here. As a landlord, you have to charge what is necessary to keep a property running and make a margin. Otherwise, what's the point? Why would private sector ever go into something if they're not going to be able to make a margin on it? But there's a balance. There's a balance between making a margin, right, and providing a service. And generally in a free market economy, right, if you charge a service that's not fit, or you're overcharging for what you're creating, you're generally going to go out of business. But because there's such a lack of stock, that's not the case with landlords. So you do get a lot of rubbish landlords who overcharge for the service they're giving. And of course, with people will view having a home or owning a home as their right, rather than having to rent. So I totally get both sides of this argument. By the way, I anecdotally, I rent. I don't own the house that I live in, for the reason that I actually prefer renting. So I do think we have an obsession with owning, which is not necessarily the correct path. Let me just get this your thing off, Stafford, just so I can talk a bit more. I don't necessarily think home ownership for your own house is the be all and end all. I enjoy having more flexibility. I enjoy moving. I move on a fairly regular basis. Try different places, different areas. Anything happens with the property, it gets fixed by the landlord. Boiler goes, fridges go. It gets fixed. I enjoy doing that, and it means I don't have to commit a lot of my capital into my own house. I can then deploy it in other places and multiply it more quickly. So I don't think we have to live in our own homes, but I think what we should be doing is whatever money we have, we should be then be able to invest it somewhere. And I get the whole thing that for a lot of people, rents are way more expensive in a lot of areas than owning a home, and so that's eroding your ability to make savings. So I get it. I get both sides of it. It's also, I think, it's an easy demographic to hit for votes, and that's clearly what's been happening for a while. So there we go. That's the budget. Any other thoughts on the budget today, team? Before we end, good, bad, indifferent. What's your thoughts? Let me know before I end for the day. It's probably dinner time, isn't it? I probably went live at the wrong time. It's nothing particularly interesting, is there, other than what we've talked about? There we go. All right, team. Look, let's see how it plays out. I'm going to endeavour to find more that we can about these individual things when the legislation gets put out. In the meantime, everybody have a great end to the week. Feels like spring is in the air, and I'll speak to you next week because I'm sure Halifax will be putting their HPI out, so we can go through those numbers and see if how much that's going to be rising, month on month in February. All right. It's been a pleasure as always. I will see you next week.